Well, we've got Sandeep Tandon of Quant Mutual Fund, who's now joining us live here on the market. Good morning. Always a pleasure talking to you. Look at the week we had earlier. 3.5% down for the markets. India was underperforming the rest of the world as well. So with everybody watching out for the FOMC meet, will it be just 4 rate hikes in the rest of 2022, etc.? Sandeep, let's begin with what you're making of the market. It doesn't even look like there's 6 trading sessions left for Union Budget.
I think, it's a very interesting 2022, the way we look at, because I expect the volatility of 2022 will be much higher as compared to what happened in second half of 2020 and entire 2021. Okay, with this background, what is very interesting to note that, despite market has corrected, like in India and emerging market has also corrected. But if you notice that the emerging market currencies has been very, very stable. Okay, whether you look at the Asian dollar index or you look at the MSCI emerging basket as a whole, that gives me good amount of comfort. Okay, because we believe that currency market gives you much early indication, and currency market gives you, they are more sensitive, they give you much better perspective than the equity market. Okay, so to be very candid with you, when we met, I think last time in December around 20, we talked about bottom is getting in place and we saw a big rally. Okay, and now obviously closer to 18,300 or 400 mark, good amount of complacency was there. So we have seen a good amount of correction. Okay, but if you ask me that something need to be one should be very worried about emerging market, should be worried about India in particularly, I don't think so. The problem area is US, which I have been highlighting for a while. The US is where the vulnerability for global equities or vulnerability for growth stock is the maximum. And that is the way we believe, unless US market bottoms out, India will also not bottom out. So in terms of, if I have to look at the volatility cycle or the VIX cycle in the US, okay, it's close to 29 or 30 mark now. I believe that it can has potential to go back to 36, 37% mark, okay, before US market bottoms out. And that can happen maybe close to Fed event or maybe one day later to that event, because post that event, volatility has to come down, and which we can bring back some amount of calm to the global equity. So I think it's a question of another 3 or 4 trading sessions where global market should rally. But one has to learn with the art of making this. I always talk about volatility as the invisible animal as your best friend, because you have to live with this volatility in 2022. So whenever you have extraordinary fear, which is the case right now, this is a time to rebuild your exposure in the equities. And when you get into complacency, which was the case maybe a week back, that's a time to prune it down. That's the way this whole 2022 will be played out.
Okay, so Sandeep, can you tell us in recent times how you made volatility your best friend or stayed volatilities as, it's BFF? Did you take cash off the market? Did you take the opportunity of the dips, and what did you buy into?
So what is the best way to play right now? You have to play for a smaller cycle, and which is the typically is the not the mindset for most of the retail investor or even the money manager. We typically buy from a medium to longer term perspective. Okay, when you get into these smaller cycles, okay, then obviously it is not easy decisions, and then you have back of the mind worry whether you are taking the right call or not. Okay, but despite that, I always believe that we as a house of Quant, we always on the mutual fund side, we also try to analyze what is the global environment first before getting into a strategy. Okay, so like 2000, we talk about adaptive asset allocation. So we give a lot of environment focus, how you adapt the environment, and then you decide your strategy. Okay, so 2020, since in the beginning of the year we are talking about, it will be going to volatile. So I think the way we have to play is that we have to prune down the expectations in the market, which I have been talking for last few months now. And globally, if you look at the somewhere in the month of September, the in terms of perception analytics, growth stocks have peaked out. The perception analytics, which means the multiple of growth stocks have peaked out. So they become a market performer. We were relatively early in making that call. That's one of the reasons we launched our value fund at that point in time, somewhere in month of October, because we felt that this is the best opportunity to capitalize through value theme rather than the growth themes. Okay. So I don't think one should be worried about market as a whole. I think the pockets have changed. The sector rotation will play a bigger role, and you have to capitalize on the short-term opportunity also. So you can't take everything from a longer term perspective. This is my 3 years horizon. This is my 5 year horizon. Okay. You have to construct your portfolio where short-term horizons and medium-term horizons should also have a large weightage now. That's the way I believe 2022 will.
Sandeep, just wanted to understand how is it that one should read into this tech sell-off right now, and not just back home but globally as well. Are IT stocks across the world falling under their own weight? And more importantly, as an investor, what's the right approach right now? Because IT, it may have peaked out in the near term, but you know that the long-term growth story is pretty much intact. And you know, even back home selectively, there are still a few IT companies which will perhaps see re-rating at some point in time. So do you buy this decline just yet?
So let me answer this question in a different manner. See, the biggest challenge as an analyst or as a fund manager or as an investment community is all about what is the fair value. Okay, what is the fair valuation multiple which you want to give to these companies? Okay, so-called growth stories. Okay, and that is the where people are able to forecast earnings quite well, maybe close to the numbers, but close to the whatever numbers we have seen, it is somewhere very close to the expected lines. But what is more important, the people are not able to quantify the valuation multiple, whether valuation multiples are peaking out or not. This is something which we do very interesting through a behavior analytics tool called perception analytics. Okay. And I said that few minutes back, the perception analytics for these growth stock or the technology stock has actually was at multi-decades high. Okay. In September 2021. What it means, and since then it started drifting down, which clearly means the valuation multiple has peaked out. We are not saying that earnings has peaked out. We are not saying the price has peaked out. We are only trying to indicate that technology stocks will not be market performer anymore. They will not be outperformer. They will be as best market performer. Okay. If we are not talking about underperformance. So even it becomes market performer, then doesn't warrant it in your portfolio. You have to prune down exposure. Today, our technology exposure for last 3 months in our portfolio is absolutely zero. We have sold off technology stock in the month of September. So I think the perception has changed about these so-called growth stocks globally, and one has to keep notice of these things, and something has changed. Okay, and this is what the exact phenomena was playing out in the banking and financial last year. The whole world was very gung-ho about Indian financial, Indian banks, and technology was undergone that stage, and bank was over. And you have seen how bank underperform and technology outperform. I believe, if not reverse, that cycle has also peaked out. So I expect the banking and financial should do better than the technology stock. So despite that recent underperformance which we have seen, and whenever we have seen sell-off happening, it is these private sector banks which we have seen a good amount of selling. So I believe that public sector banks should be one area one should look at. They have a potential to outperform the technology stocks also. And it's a very bold statement because the consensus is more towards the technology, and there's a structured bull run. We are not debating on the structured bull run, but everything has been priced in, okay, in terms of valuation multiple. That's the point which we are trying to bring to your knowledge.
Okay. We were also discussing in the morning, and Sandeep, a point to build upon, earnings season, yes, of course, is very important. We've not seen the kind of reactions one would have envisaged in the market post-earnings, right? You can take a case, an example today, for example, a stock like Reliance Industries. Union budget, 6 trading sessions away, but that pre-budget rally is also conspicuous by absence. So while we all await the FOMC meet, the RBI meet on 7th of February, just getting back to basics, what should be the approach of retail investors? You've even got the new age companies down. Zomato making a new low today. Look what's happened with Paytm. These were the new loved stocks as such.
I think the thesis which we have been talking for more than a quarter now is about the comeback of a value theme global. Okay, we are not talking about India. Okay, it's a global phenomena which we are seeing. We have been talking about the underperformance of value stocks for last year. Maybe for more than a decade, they have underperformed. And the time has come. It's a perfect time, actually. Where one can increase the exposure towards so-called value names as compared to growth names. And that's a trend. I think it's not going to be very short-lived. It's not like it's a temporary correction which we have seen in the field of some of the recent listed names, okay, because there was no earnings and the hype was there. And that is something we can only, none of the fundamental or the technical data can give you this perspective, what we can read through a behavior indicators, okay. And that's the way we talk about how when we said in the month of September, there was a euphoria. Globally, liquidity was speaking out, risk appetite was speaking out. It's a classic signs of euphoria. But if you dissect the euphoria between growth and value, then you realize there was a euphoria in growth stocks, not in value. Okay. So from this background also, I think the way one has to build your portfolio right now, it should be more towards your value. So value stock should become your growth stock. It should be a core holding, and growth stock should be your trading or tactical bets. So that's a phenomena which has changed in 2022. And I think that's a thesis we believe will can last for a longer period of time than what market anticipates.
How to do that, Sandeep? You've been constructive on real estate, for example, as well, which is considered a multi-year cycle. Look at the numbers that, counter like Vardhaman Textiles has put out. So one should look at those manufacturing, textile type stocks, or one should look at, the fossil fuel, energy-based stocks, which are considered to be traditionally deep value also, the likes of NTPC. You've got capital goods, L&T. If you can go into more details?
So let me answer this question from a larger perspective. The concern which everybody has in mind, whether small cap stocks have peaked out. Okay, so and I'll answer this question through this route, because I believe the small cap has not peaked out. There is no signs of classic euphoria which is needed for the market. We have not seen even in September 2021 also. Okay, it's only in the select pockets we have seen euphoria. So if the small cap index has not peaked out from a longer term perspective, okay, then I think the opportunity in India is much more meaningful when we talk about sector like PSUs, we talk about media or textile or even capital goods, okay, even energy, okay, or utilities company which we're talking about. I think they all qualify for this space, okay. So this is the segment of the market one has to really look at, and there is a great deep value even in these stocks. You talked about some of the names which you mentioned. They are qualifying the deep valuation perspective, and people have used to ignore it because there was the hype of growth which was getting built, and I think that has peaked out, okay, and people will take some time to digest that, and maybe down the line 6 months when they see the massive underperformance, maybe obviously postmortem analysis is going to be very easy at that stage. This is what exactly unfolded. Okay. And I can tell you from our data, which we look at from a global macro perspective, our predictive analytic models are already endorsing this cycle has peaked out for growth stocks. Okay. I'm not saying there'll be one way vertical fall, okay, because no move in the market will be linear. You will see pullback rallies and you will see sharp pullback rallies in these names. Okay. But one has to be very careful. This is whether this is buy on dip and sell on rallies. For me, growth stock is a sell on rally and value is buy on dips.
Sandeep, but will IT or Indian tech qualify as growth stocks? Because these are not like the US tech stocks where there is complete disregard of cash flow, complete disregard of what is happening in terms of profitability. Indian IT companies are mature companies. Businesses are growing at 15-20%. They generate a lot of cash. They do a lot of buyback. So can we classify them as growth stocks and say that, okay, growth is down and tech is going to be down?
So Nikunj, the way we look at, even you look at Indian IT companies, they are not cheap right now. They are all trading between 35, 40 times. Some of the stocks are even 60 to 90 times also. So from the valuation perspective, definitely they are not very attractive if you can't call them as a very aggressive, or the price to sales multiple, which some of the technology stock have seen in US market. But my view is that everything is globally linked. The sentiments are globally linked. So if the Nasdaq is going to underperform Dow, okay, then it is quite natural that Indian IT as the index will also has potential to underperform the value basket. Okay. So I'm not that bearish on Indian IT company. Maybe at appropriate time there will be value. Okay. The only thesis which I'm trying to build, that they don't qualify in our model as a core holding. They qualify for a tactical positions. Okay. So we will like to play that way, because uh, as per our predictive analytics model and the adaptive asset allocation which we are talking about, they're all endorsing this cycle has peaked out. So whether question comes with, if they are not going to be outperformer, whether you want to have that sort of exposure in your portfolio, you want to have market performer names, and given a very skewed portfolio towards your own your own portfolio, it doesn't fit in our philosophy. So I like to avoiding that stock. Yes, at appropriate time, I'm a buyer in these names. Okay, and when the stocks correct sharply, so I will be definitely taking a tactical bets on these names, because ultimately you have to optimize these opportunity also when the fear is extraordinary and short positions extraordinary, and such a time we like to capitalize on that.
So what is your proprietary indicator telling us about the budget trade? No pre-budget rally this time. Looks like there may not be a pre-budget rally if I consider the global setup. Last time markets went up after the budget. Could we see a reverse of that, or could we see a post-budget rally this time?
So let me give you perspective from, let's say, from a capitulation point of view, or the fear index, quant fear index point of view. There is no classic signs of capitulation as of yesterday also. Okay. However, fear index has started inching up, but is nowhere close to, maybe it is just 30% what we have seen in December 2020-21, maybe around 20 or December. So it means that it has potential to correct further from the current levels. But in terms of, if I have to say in terms of time cycle, then I will say, if VIX, we are expecting that in next 3 or 4 trading sessions, if VIX S&P VIX should bottom out, it should peak out post this Fed event, then I think Indian market should also peak out. It's not necessary that every time the fear index has to spike up to that extent. I think there's no, because market is relatively light. Okay. Commitments are on the lower side and people are generally quite skeptical. With that background, I don't think the fear index, the quant fear index or the capitulation index will really spike up to desired level, because there is no big crisis like what we have seen in last, or let's say in December, or what we have seen in March 2020. So I think it could be a trading opportunity, and market should in next 3 or 4 trading session, when global market bottoms out, Indian market should also start recovering, and recovery can be equally sharp. And that's the way data points are endorsing.
Right, Sandeep, great to have you on the show. Thank you so much, as always, for taking the time out and speaking with us.
Yeah, thanks.